Hello, and welcome back to Truss Talk. I'm Jeff Miller, CEO of Truss Financial Group. I've been helping entrepreneurs and investors navigate the mortgage world for more than a decade, and let me tell you, 2026 is providing some of the most unique challenges I've seen in 3 decades.
And I'm Jason Nichols, partner here at Truss Financial Group. My focus is on the strategy and the math behind the money. We started Truss Financial back in 2006 because we saw that the traditional banking system was fundamentally broken for people who don't have a simple W-2.
Today, we're tackling a massive question. Is the BRRRR method dead in 2026? For anyone new to the game, BRRRR stands for Buy, Rehab, Rent, Refinance, Repeat. It's the strategy that built most of the rental empires you see on social media.
Yep, but the world has changed. In 2021, you could trip over a property and make it work. Today, with 30-year fixed investor rates hovering in the 6.5% to 7.5% range, and home prices remaining stubbornly high due to low inventory, the old way of doing BRRRR is hitting a wall.
We're seeing a lot of doom and gloom headlines, but the reality is that the method isn't dead. It's just become a pro sport. At Truss Financial Group, we are still closing these deals, but the execution has to be flawless. Jason, let's talk numbers. Why is the refinance step the most critical part of BRRRR causing so much pain right now?
According to me, it's the 70% rule versus the appraisal gap. So historically, you'd buy a house at 70% of its after repair value. That's the ARV. But in 2026, renovation costs have stayed high. Labor and materials are up significantly over the last few years. If your rehab goes 20% over budget, which is the current industry average, your repeat capital gets trapped in the deal.
Yep, and the banks are tighter. In 2026, most traditional lenders won't even look at a cash-out refinance until you've owned the property for at least 12 months. That's called seasoning. If your hard money loan is at 10% interest, waiting a year to refi can eat your entire profit margin.
Exactly. Plus, the big banks are requiring a 1.25 DSCR, the debt service coverage ratio of your property, basically. If your mortgage is $2,000, they want to see $2,500 in rent. In many high-growth markets right now, that $500 gap is hard to find.
This is where we do things differently at Truss. We don't stop at the 1.25 ratio. Jason, explain how we handle a deal where the rent doesn't cover the mortgage on paper.
This is the Truss secret sauce. While other lenders give you a no if the DSCR is below 1.0, we have a way to bridge that gap using asset depletion.
Walk them through the math on that, Jason.
So let's say you have a property where the rent is $2,000, but the new mortgage payment is $2,200. That's a 0.90 DSCR. A traditional bank won't touch it. But if you have a brokerage account, a 401k, or a cash reserve of, say, $500,000, we can deplete those assets on paper.
Right? We take that $500,000, divide it by a set term, usually 84 to 120 months, and we treat that resulting number as monthly income.
Exactly. That paper income from your assets is added to the property's rent.
And suddenly, that 0.90 DSCR deal looks like a 1.5 DSCR to the underwriter. We use your wealth to verify your liquidity, allowing you to finish the BRRRR and pull your cash out, even if the rental market is currently tight. So the answer is no, BRRRR is not dead. But you can't rely on market appreciation to save you anymore. You have to buy for margin, and you have to have a mortgage broker like Truss Financial Group that can look at your total financial picture, not just a single rent check.
We're still seeing investors win. They're finding off-market deals, using our no-ratio DSCR or asset depletion programs to refi in as little as 3 to 6 months instead of waiting a year, and they are keeping their capital moving.
If you're sitting on a property right now and you're worried the refi won't pencil out because the rent is a little low, don't panic. Call us.
Let us run the asset depletion numbers for you. We can usually tell you within a day or two if we can make the deal work.
You keep building the portfolio, we'll keep building the bridge.
Thanks for listening to Truss Talk.
We'll see you next week.